Has institutional interest in Bitcoin and other major cryptos, has it dried up or has it simply slowed down?
It has dried up. It had even turned negative in May. It's probably closer to flat at the moment when we look at the institutional impulse in futures or Bitcoin funds. What I think is important here to highlight is that the slowing and the drying up of this institutional impulse had begun in May already. We started seeing, in April already, before the May correction, we started seeing already in April a shift away from Bitcoin funds into physical gold ETFs, which means that some of the institutional investors that back in the fourth quarter of last year, they saw an opportunity to move into Bitcoin away from gold. They did the opposite. They started doing the opposite from April already. So the moment we are still stuck, we don't see a lot of buy the dip flow we had seen previously in Q4 of last year or the Q1 of this year. And we have this additional headache, which is the potential selling of Grayscale Trust shares as the lockup period expires this next month. And that selling pressure is likely...
Nicholas, let me jump in for a second. Do you think that the volatility, and we're showing there's been something like, I don't know, 10, 50% drops, 80% drops over the last number of years, but those were done when it didn't have the interest and the publicity that it does now. Does the volatility we're seeing, do you think, or do you have any indication of that's scaring potential investors off maybe permanently?
That's difficult to say permanently. It's difficult to view that as permanent. My guess is that the volatility of Bitcoin will normalize from here. At the moment, is 6 times bigger, the vol of Bitcoin relative to gold. I think that ratio will perhaps converge towards 4, but I think is for sure a problem. I don't think it will create a long winter in terms of Bitcoin markets. To me, the key here is not vol, is price. I think the lesson from the past couple of months is that demand for Bitcoin is not price insensitive. And there is going to be a price where institutional interest will pick up, I think, irrespective of the volatility. So that's more important.
Does your research, Nicholas, show any indication as to whether there's a divergence of interest in the other coins and the other cryptos, like an Ether or an XRP or a Litecoin? Or do you believe that ultimately that while people may disagree with this, they are going to pretty much trade together as an asset class?
Yeah, I think there has been a divergence actually between Bitcoin and other cryptocurrencies. Back in April, there was not only money fleeing Bitcoin funds to enter physical gold ETFs, but also Ethereum funds. So there was also some institutional shift back in April from Bitcoin into Ethereum. And now we are seeing the opposite. The flow into Ethereum funds has slowed over the past 2-3 weeks, at the same time as the flow into Bitcoin funds has turned a bit less negative, has improved. So that means here that there is perhaps a relative value opportunity that some institutional investors are seeing to buy Bitcoin and sell other cryptocurrencies. So I think when we look at the share of Bitcoin in the total cryptocurrency market, it was like 60% back at the beginning of April. It dropped like very abruptly in a matter of weeks, from like 60% to almost like 40% by May. And now we are like at 46. I think a healthy number there in terms of the share of Bitcoin as a percentage of the total cryptocurrency market cap is 50% or above. I think that's another indicator to watch here in terms of whether this like bear phase is over or not.
Shepard Smith here. Thanks for watching CNBC on YouTube.